Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Mid-Cap Radar. The market's down about 40 odd points, 10,147. Slight bit of recovery coming through, but not quite. It's, I think, the 7th straight day. I think with the exception of one day in between when the market posted a positive close that we've been kind of selling off. And now it's totaled about, 360 odd points from the all-time high to where we are right now. But lots of stocks moving around. Advanced decline still firmly in favor of declines. Samira, good afternoon.
Hi, Prashant. Good afternoon to you as well. And let's also pull up the European markets and see if we're getting the first rates over there because, let's see, a bit of a downtick there. So about 0.25% lower on the frontline indices. We'll also see how the peripheral markets open up. But for now, the first rates a bit on the downside. So let's get started. We have Mitessh Thakkar joining in with the top technical trades this afternoon. Mitessh, good afternoon to you once again. 10,150 perhaps looks like it's not going to be respected today as we close, but on the index, any further intraday call?
Good afternoon, Sumera. I think, Prashant was just highlighting it's the 7th or the 8th day continuous in falling. I think he's right. There's only one day when between we got a 5-point plus kind of closing, but I think it's been a market which has declined a lot, extremely oversold. And now it's trading close to very important support zones of 13-week moving average, which is around the 10,100 mark. There's also a swing low earlier over there, and there's also a price gap around the 10,100-120 mark. So given the fact that we are quite oversold on the short-term intraday charts and we are close to important daily support zones, my sense is that I think we are most likely to get a bounce back from here. So around the 10,130 mark, I would be tempted to buy into Nifty with a 40-point kind of stop and look for a bounce back. Now, not necessarily a big reversal, but a stronger bounce back than what we have seen. And we could see targets of 10,200, maybe 240 on the outside.
Okay, so test the waters and hope the market turns around. As you said, it's looking very oversold in the near term. In terms of stocks, Mitessh, what would you recommend?
So one of the trading calls is on Nifty, which is what I've already covered.
Yeah.
But I also have one buy and one sell. Bharat Financial appears to be breaking down, so that's a sell with a stop at 972. Look for targets of 920. While ICICI Pru Life, very similar setup to the index, extremely oversold now, trying to reverse. The reversal happens about 383. So if that is being crossed today, buy with a stop at 375 and look for a target of 400.
All right, Mitessh, thanks very much for your afternoon trades. Well, Chief Economic Advisor Arvind Subramaniam says that GST tinkering will not have any major impact on the fiscal deficit. Speaking exclusively to Lata Venkatesh, he adds that the council will consider including land and real estate.
Land and real estate was on the agenda at the last meeting, but we just could not get to it because of lack of time. It's going to come back on the agenda probably even at the next meeting. Just as we saw with the 28%, we saw with the simplification, there is momentum building in that direction on land and real estate. So, it's very difficult to say March, April, May, but I think we are moving in that direction. I think that's all one can say at the moment. Yeah, it's a very positive development. I think the other sector which I think is very important to bring into the ambit of the GST is electricity.
The frontline indices have lost just a tad bit more. So now we're down to about 10,137 odd on the Nifty at the low point of trade. But let's get in some earnings reactions. Jindal Stainless is a stock in focus, so they have seen good growth in the top line, but the operational metrics remain to be under fuel. But in terms of their profit, it's a bit of a turnaround quarter because I think after 5 quarters of posting losses, the company has posted profit this time around. Anurag Mantri, the group CFO of Jindal Stainless, now joins in. Mr. Mantri, good afternoon, sir. You've seen good growth in the top line this time around. I mean, almost a 40% bump up. But what about the margins, sir? There's still some bit of pressure that continues. I mean, power and fuel costs have seen a huge spike this time around. Is this a one-off this quarter? Where do you think margins can stabilize?
Yeah, good afternoon, Samira. So absolutely right. So as you rightly said, that there was a big jump in terms of our sales revenue, And just to tell you, our strategy on this quarter was absolutely to focus on the revenue growth as well as the capacity utilization. So the two-pronged strategy which we took in this quarter was that widening the customer base and capturing the larger market, which was post GST, because before GST this market used to be generally catered by unorganized sector. So if you see, our volumes have jumped up, our revenues have jumped up. In terms of cost, yes, we had a pressure, but we didn't pass it on to the customer, which is typically the case in our industry. So we gave this benefit to the customer, and we focused more on the volume terms. So our EBITDA, in terms of EBITDA margins, it didn't increase in the quarter. But if you see on a half-yearly basis, we are on track. So if you see on a half-yearly results full basis, our revenues were up 18%, EBITDA was up 12%. And if you see the profitability, there was a big turnaround. So last year, first half, we had a 143 crore of loss. And this year first half, we had almost 69 crore of profit. So almost 212 crore of that big turnaround on in terms of our profitability. So we are conscious of that. We are opposed GST. We are giving benefit to the customer, focusing more on our top line, not passing on the cost increase immediately to the customer. So it's a win-win situation for the Indian producer as well as the Indian customers.
And aided also by an interest refund. But sir, speaking of capacity utilization, could you tell us what it's currently at, and also what's the targeted sales volume for FY18?
Yeah, so capacity utilization, if we see on a half-year basis, we were above 90%. But in H2, I think is expected to be better, because as you see that the reforms which came in terms of GST as well as in terms of anti-dumping, and so we see H2 is to be volumes to be better. In quarter 2, we did almost 2,000 metric ton of the sales. So we expect to continue this type of momentum. In terms of overall revenue-wise, if you see, I think quarter 2 momentum should be maintained in the second half, and second half should be better for us.
So you can do 140, 150 crores in profits in the second half, Mr. Mantri?
See, I will not give the specific guidance on the profitability, but if you see that now whatever EBITDA we add up further to the over in the quarter, that will entirely go into profitability, because interest and depreciation costs are more or less same. And in terms of capacity utilization, we target to achieve 110, 120% with some balancing of the plant. So we will, it's not that our capacity will be restrained only 100%. With some minor balancing and debottlenecking, we can easily reach to 120%.
Which used to be the peak, I mean, I guess 10 years back in the last commodity bull market for most steel companies. No, so my question was for the full year. Sorry, I said half, the second half. You said run rate will continue, so you can get to about 140, 150 crores? You said you've done 69 crores in H1.
See,
yeah.
Yeah, so 69 crore in H1. I would say what focus on more EBITDA. We did a 250 crore of EBITDA in this. So I think the second half of EBITDA should be better in those times of run rate. I will not give very specific number, precise number, but I think you are absolutely right. Whatever EBITDA we add over and about 250 crore will add to the profitability, and therefore PAT should be higher than what we are targeting in H1.
All right, Mr. Mantri, we'll leave it at that, sir. Thanks very much for joining in. We're getting news. It's source-based news that the government may look at infusing an additional 10,000 crore rupees in PSU banks in FY18. Sapna is bringing us this news, so let's try and get her on the phone, and she'll try and explain this to us. I think if I was not wrong, there were calls from a lot of quarters to say that, the fund infusion as of now through the PSB bonds was enough to sort of tackle the NPA problem, but not really enough for their growth. So perhaps now the government is looking to add to that. So an incremental 10,000 crore rupees in the PSU banks in FY18 is what Sapna is picking us. And in fact, Sapna is on the line with us. Sapna, what more details can you share?
So basically, what we are getting is a two-pronged view, basically, that, Indra Dhanush also has money for the next financial year, basically. Of course, it will come to the budget. So the plan as of now is to prepone that infusion as well into the current financial year. So that means there will be a kitty of almost 30,000 crores in the current fiscal itself. Out of the current year's 10, I think 2 has already been given. So they're left with 8 and then additional 10. So this is in the pipeline right now. We have to wait for the approvals to come in. But most likely, this is the game plan the government is looking at. The second thing is that, of course, clarity coming in terms of the timeline for the issuance of the recap bonds. Within this calendar, probably sometime in December, they are putting the contours together. Finance Minister, DA Secretary, DFS Secretary, they are the ones who are working it out. Having said that, we understand that the quantum, the first tranche will be upwards in the range of 70,000 crores in terms of the bonds itself. We also understand that all the banks will be coming under this recap bond issuance, and there will be growth capital as well as regulatory capital, both. But all PSBs are going to be covered. That much is very clear. Plus, what the government has already done simultaneously is very clear instructions have gone out to public sector banks to kindly go and tap the markets. Probably that process is going to start from December onwards. 6 to 7 banks have already been shortlisted. Some of them have done some bit of it, but there will be more that will be followed. So around 1,000 odd crores to 2,000 odd crores is what we understand. They may be raising from the market sometime December on.
Sapna, so just for so the earlier announced amount was about what 2.11 lakh crores, right?
2.11 lakh crores.
So that is now 2.21. Is that what you're saying?
No, so 2.11 lakh crores is the total, out of which 1.35 lakh crores is the bond.
Was the infusion? Well, that was the infusion. The rest was supposed to be raised by the market, right?
No, raised by the market, plus 58,000 crores to be raised from the market, plus 20,000 crores of budgetary support from the government, which is exactly what is the money in the Indradhanush.
Right.
So on that front, Prashant, they have the plan is to prepone that as well, 10,000 crores, which may be coming next financial year. The proposal here is to bring that upwards in the current fiscal itself in terms of the cash growth on the budget. Now, there will be an approval process for that. So you have to wait and watch when that happens. Does it happen in the winter session supplementary or does it happen in the budget session supplementary? That's one. Second, in terms of the 1.35 lakh crores worth of bonds to be issued over the next 2 years is what the government has said. So major portion to be front-loaded, probably that range of the first tranche will be 70,000 crores and above. So that's the second point that we have to look at. And in terms of the market raising, 58,000 crores over the next 2 years is what they have said. But the instructions have already gone out, so some bit of that will start immediately, probably from the month of December onwards.
All right, Sapna, thanks very much for that. And an early spike coming into some of those stocks. The other bit of news that flashed actually before this from agencies was that the government may look at preponing the implementation of BS6 to 2018. I think the original date was 2024. And, 2020 was supposed to be the implementation date for BS5. Then there were reports that perhaps they may skip BS5 and go directly to BS6 in 2020. But this news that they may advance that also to 2018, I think it's going to be met with quite a bit of resistance from the auto industry. So we'll try and collect some more data on this and, try and see what the impact could be. But the auto guys are not going to be happy.
Come back. 45 points off on the Nifty, 10,142. No real reprieve and no real relief for the ADAG group stocks as well. Reliance Communication was selling off earlier. I mean, that bond default was, of course, the issue. By the way, the stock recovered a little bit from the lows, but look at Reliance Capital now. I mean, that's a big fall, 3.33% odd lower, and I think Reliance Infrastructure is selling off a little bit as well by about 1.25%. We also put out, banks which have got large exposures to Reliance Communication, SBI. I mean, actually, it would be most large public sector banks. SBI, of course, figures as one of the top lenders to the company. We'll come to that in a bit. Let's bring in the management at LT Foods. They reported numbers for the second quarter, and it's been a strong quarter. Mr. Ashwini Kumar Arora is Managing Director and CEO at LT Foods, and he's joining us right now. Thanks very much, Mr. Arora. Appreciate you joining in. I mean, if I look at the second quarter revenues, they're up 3%. But if I look at the operating profits, they're up almost 30%. Could you tell us what went on in the quarter?
Three things happen. One is, our Daawat branded sale has gone up, and that's the GP has improved by 2%. And the other impact is, the saving in the interest cost, and some impact of the depreciation that has helped to improve our bottom line as compared to what we have grown on the top line.
I mean, branded was about 70% of your total produce, right? of your...
That's right, So
it's gone up even more.
In the first half year, it's 65% of the total revenue. And, the rest is, 10% our organic business, which is also growing very fast.
So what is the difference? I mean, on products branded, brands like Daawat, what kind of margins do you make? Is that itself going up apart from the apart from their share?
Daawat, the branded business gives you a better margin and the sustainability in the business. Yes.
Mr. Arora, good afternoon, sir, and congratulations on a good quarter. But what I want to know is why your debt has gone up, because if I look at your long-term debt, that's almost at now 100 crores. I mean, 92 crores to be exact. Short-term debt also has spiked. What's the reason?
So long-term debt, we have invested in Europe and America. So in this year, we have set up a rice manufacturing plant in Europe, which was, earlier, it was a kind of entry barrier for us. And there was a duty of 170 euro. So that's the one thing we have done. And the second thing, we have put up a ready-to-eat, for organic retort rice in America. So that's why, the long-term debt has gone up. So in working capital, it's only around, 1327 to 1392. That's only around 60 crore short-term. That's because of the increase in the paddy prices.
All right, Mr. Arora, thanks very much. It's a pleasure speaking with you. Good luck as you sort of go on into the second half. We'll speak to you soon again. Automotive Axle second quarter numbers at the bottom of the screen. Stocks up 7%. Profits of 20 crores, which basically means that they've doubled compared to what they reported same quarter last year. And revenues are up 50% at about 350 crores compared to 228. I mean, so on an absolute like-to-like basis, the numbers seem extremely strong. Operating profits are up 60%. So this is very, very good performance. 40 crores compared to 24 crores plus. And there is margin numbers as well, although the expansion in margins is not all that great. But again, I mean, top line has also grown quite considerably. I guess that has depressed the margins a little bit. We will sort of wrap up this edition of Midcap Radar here. Thanks very much for watching. There's lots going on, so keep it with the channel. Your stocks will follow in just 2 minutes.